Welcome back, ladies and gentlemen. It's Benedict here again, and now let's continue with the source documents, and let's talk about cheque. And when you talk about cheque, we mean cheque is an authorization to draw funds from a bank account. In order to do this, a cheque must state the name of the pay, amount to be paid, and the date. A cheque is one of the more common forms of payment used. So we are saying a cheque is an authorization to draw funds from a bank account. Is an authorization to go and withdraw funds from a bank account. And in order to do this, a cheque must state the name of the pay, the amount to be paid, and the date. A cheque is also a more common form of payment. So we have various forms of payment. You can pay in cash, hard cash, and then you can pay using bank transfer, and then you can also use a cheque. So a cheque is also one of the forms of payment. So we are also saying a cheque can also be returned to cash, which means the payment will be made by the bank to whomever that presents the cheque. So when the cheque is open, we always talk of open cheque when when whoever is going to encash that cheque will go and receive the amount in cash immediately. For example, when I say I'm giving you an open cheque, it means that you will not present this cheque maybe after 2 days, but you'll just go and cash in that cheque immediately. I give that cheque. If the date is today and I write that cheque today and the cheque is open, so you'll go today and you'll go to the bank today and withdraw cash using that open cheque. So we are saying a cheque follows the following process. So a cheque has a process. So the first process of a cheque, we have 5 steps, and the first step is that from the payer, the cheque goes to the pay. So when I'm paying you through cheque, I'll be the payer. I will be the payer because I'm paying, and you'll be the pay because you're being paid. So whoever is being paid is called the payee, and whoever is paying is the payer. So I'll write a cheque and give you as the pay. So the next step, the pay to the bank of the pay. So you as the pay, you as the person who has received this cheque, will take this cheque and deposit in your bank. Okay, you have your bank and you have your account there. So when I give you a cheque, you will deposit this bank, or rather this cheque, to your bank account. So you go to your bank. So if your bank is KCB and my bank is Standard Chartered Bank, so I'll give you a cheque from a Standard Chartered Bank, which is my bank, but you deposit this cheque in your bank, which is KCB. So the next step is from bank of the pay to the bank of the payer. So when you deposit this cheque in your bank account, but this cheque is coming from Standard Chartered Bank as my bank, so this cheque, your bank will transfer this cheque to my bank. So my bank was Standard Chartered Bank and your bank was KCB, but the cheque that I was writing to you was coming from Standard Chartered Bank. So your bank will again transfer this cheque to Standard Chartered Bank. Then the bank of the payer sends fund to the bank of the pay. So the Standard Chartered Bank, which is my bank, after verifying this cheque, will transfer funds from Standard Chartered Bank to KCB Bank, which is your bank. So that's the fourth process. Then after funds have been transferred from Standard Chartered Bank, which is my bank, the bank of the payer, to KCB, which is your bank, the bank of the payee. So your bank, which is the bank of the payee, will transfer funds, rather will make funds available to the payee. It means that they will transfer funds to your account. So when you go to your account, you're in a position withdraw funds from your bank account. So let's move forward. I hope you guys understood what we mean by or rather the process of a check. That's simple. So we also have contents of a check. The check must have standard contents. So we have the drawee, and the drawee has the financial institution where the check can be presented for payment. So we are saying the drawee is the financial institution where the check can be presented. So when my bank is Standard Chartered Bank and I'm writing you a check which you'll deposit in KCB Bank, it means the drawee here is the Standard Chartered Bank. So the check is coming from Standard Chartered Bank. So when you receive this check and you put in your KCB, KCB will present this check to Standard Chartered Bank as the drawee. Again, you also have the pay, saying the pay is the person who is to be paid. The person who is supposed to receive the funds is the pay. That simple. And then we have the date of issue. So the check must have a date. When you are writing a check, you must write a date. For example, maybe you wanted to post-date a check. You wanted to write the date of a check on a later date. I'm writing a check today on 11th January 2022, and then by mistake I forget to write a date on this check. So when I give you this check, but I wanted to write 31st day, or rather 31st January 2022, I did not write anything on this check. And that means that you, the person taking this check, can just write any date. You can write the date of today, the date of tomorrow, the date, any date that you will feel like, but a check must have a date. So whoever is drawing this check must write a date on that check. So a check also must have amount of currency, of course the amount that is supposed to be paid. And then a check, again we are seeing a drawer, the person or entity making the check. The person or drawer making the check. So the payer, in this case here is the Standard Chartered Bank, and the person, I have an account with Standard Chartered Bank. So Standard Chartered Bank can be the drawee to make this check to pay you, or me as the holder of the account of Standard Chartered Bank can write you a check. So I'm the drawee. So the drawee and the drawer. So the check is coming from the drawee, and the check is going, rather the check is coming from the drawer and check is going to the drawee. So the drawee is the bank where you present your check for payment. So if my bank is Standard Chartered Bank and I'm paying you, so Standard Chartered Bank will be the drawer, and your bank where I'm paying, the KCB, will be the drawee. And then a check must have a signature of the drawer. So me, the person who is giving you a check, so that you can present it in your bank, I must sign that check. So by signing that check, I will have authorized my bank to transfer amount from my account to your account, or from my bank account to your drawee account. So we also have machine readable thing and account information. So this one just a metallic component engraved or inscribed within that check that will have the details of the drawee or the person holding the account that writes the check to the pay. So here is a sample of a check. So we have a place where you must write the name of the person to be paid, the name of the pay. We have a place for date. You must write a date. Then you have a place where you must write the amount in figures, and we also have a place where you must write the amount in in letters or other amount in words. And then of course, the person who is being paid must write his bank account number in this place, the account number of the pay. And then down here we have the details or the banking details of the drawer, or the banking details of the person who is issuing this check. And then there must also be a place for the signature of the drawer. The person who is giving this check must have a place to sign to authorize and the withdrawal of funds from his account. So this is a sample of a check. Then we also have parties involved in a check, and the parties involved in a check are the drawer or the maker. And we are saying a drawer refers to a person who is a customer of a bank account holder, and issues a check to someone, individual or organization. In short, the drawer or the maker is the payer, is the person who is giving out a check to pay someone. And then we have the drawee, and here the drawee refers to a bank where a check is withdrawn. A check can be withdrawn at only a related bank. So drawee is a bank where check is withdrawn. And then we have pay, the person who's supposed to be paid. The pay refers to an individual or organization to whom a check is issued. The amount mentioned on the check is paid to the payee. In some cases, there can be two other parties involved with the transaction made by check. So the pay is the person who is supposed to receive the funds. And then we have the endorser, the endorser. If a party or payee transfers its rights to taking payment to another party, his stock share is referred to as an endorser. So when I pay you and you have a person who is supposed to receive funds on your behalf, so that person you are calling the endorsee, and you are the endorser. So the endorsee is the person who is supposed to receive money on your behalf. It's the person of whom you have transferred rights to receive money on your behalf, the endorsee. And you, person transferring rights for money to be received on his behalf or on a behalf, the endorser. Okay, and then we also have types of checks. We have quite a number of types of checks. We have bearer checks. We have bearer checks. We have order checks. Okay, we have closed check. We have open check. We have post-dated check. We have antedated check. We have stale check. We have traveler's check, account pay check. We have self check, mutilated check, banker's check, blank check. So we'll just talk quite we'll talk quite on a few. So we'll talk about rather we can also say that some of these types of checks are self-explanatory, like this one for post-dated check. Just the name implies that the check has been post-dated. So supposing I was to give you a check and I'm supposed to write the date of today, 11th January 2022. Then I write 30th January 2022. That one is a post-dated check. The antedated check is that check that I was supposed to write 11th January 2022, but I write 1st January 2022. Becomes antedated check. Then a stale check is the check that its validity period has expired. Like now the check will be valid for 3 months. Then after 3 months, when you present this check, it cannot be cashed in because the check has already become stale. Then we have traveler's check. So when you are traveling from one country to the other, the other country where you are traveling into is having a different currency from your country. So you'll need a traveler's check. So traveler's check will help you to avoid carrying cash, or it will help you withdraw funds in a different currency, or rather to withdraw funds in a different country of a different currency. So again, we have account payee check. So this is where the check has been written account payee only. So it means that whoever whose name has been written on that check is the only person that check can be paid to. Is the only person whose account funds can be transferred to. So those are quite a few explanation of some straightforward types of checks. But here we have bearer check, and we are saying a bearer check refers to a party. The bearer check refers to a type of check that can be withdrawn or encashed by a person bearing the check. In simple words, whoever is carrying this type of check is eligible to withdraw the amount mentioned on that check. And then we also have order check. And order check here means a type of check that can only be withdrawn by the person whose name is written on that check. The person whose name is written on that check. No other person has the authority to encash these checks. Moreover, the bank first verifies the person's identity before releasing the check payment to ensure the designated person's payment issuance. So that's a simple explanation of order check. And then we also have a closed check. So with the closed check here, we are saying it's when a drawer makes a double parallel lines on the bearer check's top left, okay, top left corner, it is called a closed check. Doing so ensures that the transfer of money to the authorized person only. This means that no matter what, the person will only transfer a certain amount from the drawer's bank account to the payer, rather to the payer's bank account. So that is explanation of a closed check. And then we have open check. An open check is a type of check that is not closed. It is like a bearer check. An open check can also be withdrawn by a person who is bearing or carrying it. These checks are eligible to be encashed from any bank and any branch without any identity verification. Besides, we can endorse these checks accordingly. This means that open check can be transferred to any other party by the original payee, making him a new payee. So if I give you an open check, it means maybe I will not close that check, and maybe I will not even write your name on that check. So when I write 10,000 shillings on this check, and then I sign it and give it a date, but your name as the pay is not written on that check, you can give this check to anybody. So anybody can encash this check. And then open check, you go to the bank and they will give you cash. You don't wait for maybe 2-3 days to get your money. You'll just get the cash when you present that check. So again, we also have a traveler's check, and traveler's check we had explained. And here they are saying traveler's check means foreigners mainly use traveler's checks. This means that this check can be used when a drawer travels abroad and wants to avoid carrying hard cash. Traveler's check are issued by the bank and withdrawn in other countries to obtain specific currency. These checks do not expire and can therefore be used in future visits and trips while traveling abroad. So that's the explanation of a traveler's check. It's straightforward. Then we also have a account payee check. This one we also had explained. But here we are saying account pay check are the same as the cross check, but there will be no third party involved. The amount specified on a check is directly transferred from the drawer's account to the payee account. This check can be identified by two parallel lines drawn on the check's left top corner and the words account payee written between the lines. An account payee check's main benefit is eliminating the risk of money being encashed by an authorized person. So that's the explanation of account payee check. So we also have the banker's check, and the banker's check here is, as the name suggests, a banker's check is a check issued by the bank on behalf of the account holder to transfer certain amount to any other party within the same city. These checks are only issued after debiting the specified sum of amount from the person's account drawer. So bankers' checks are also referred to as non-negotiable instrument because banks have no reason to dishonor these checks. So banker's check cannot be dishonored. And then a banker's check is just an assurance. It's an assurance to whoever is being paid that they will get funds from the payer. They will get funds from the drawee. So the banker's check cannot be dishonored. We cannot say that I gave you a banker's check and then it was dishonored because there were no funds in my account. That cannot happen. When I give you a banker's check, you are assured of receiving those funds. And then we have a blank check. We are saying a blank check is a type of check in which no other details or fields are filled except a drawer's signature. In this type of check, all the fields are left empty. So let me give you a typical example of a blank check, or a typical situation that you'll need a blank check. You are an accountant, or you are maybe finance manager, maybe a CFO, but is that person that must sign checks, and this person that must sign checks needs to travel. He needs to travel to a different place for maybe 2 months. So when he's going for 2 months, you'll sit with this person and tell them, I need this number of checks, I need this number of open checks, and I need this number of cross checks. So when they are cross, it means that whoever you'll write the name to be paid is the only person that will be paid. But when they are open, it means that you can use them to withdraw cash from the bank. Maybe you need petty cash. So blank check, this person you only give his signature, sign, and then you'll remain with the check. So when you want to do payment, you'll just plug and put the details, put the date, put the name of the person to be paid, and put the amount to be paid, and give the person to be paid. When you want to withdraw cash, you will take the open check that has been signed, and write the amount, whoever is going to withdraw cash from the bank, and write the amount and write the date. So that's the meaning of a blank check. So I hope, ladies and gentlemen, you've understood what is all about checks. And now we've reached the end of source documents. We said the source document like statement, you'll do some research on them. But when you talk about statements, just a narration of rather statement, as the name implies, just a statement. Like now, when you talk about a bank statement will show you the funds deposited, the funds withdrawn, and the balances. And the data statement will show you that these were the invoices invoiced to client, and these are the amount that the client has paid, and these are the amounts that are due. That is a statement, or rather data statement. When you talk about a payroll statement, we'll show you the list of employees and the salaries that they are supposed to be paid within a given period. So, ladies and gentlemen, let's stop at that for source documents. So when we come back, we'll continue with the accounting for revenues and expenses, and what we'll be talking about will be we'll be talking about we are in chapter 2. We'll continue with chapter 2, but we'll talk about I will be talking about the books of original entry as we move on with the journals, cash book, all that. So we are done with the source documents. We'll move to the books of original entry and journals. So this we'll do in the next video. So thanks a lot for watching, and let's meet again on the next video.